The Republican National Convention is a big deal in American politics. It's where the Republican Party picks its candidate for President of the United States. This year, the RNC could be important for another reason: cryptocurrency. Many people are wondering if the Republicans will talk about Bitcoin and other digital currencies. Will they support them, or will they try to stop them? The answers could have a big impact on the future of crypto. Cryptocurrencies are changing the world. They offer a new way to send and receive money without relying on banks or governments. This has made them popular with some people, but others are worried about the risks. Governments around the world are trying to figure out how to regulate cryptocurrencies. The decisions they make will determine whether crypto becomes a mainstream part of the financial system or remains a niche technology. The RNC is a chance for the Republicans to show where they stand on this important issue. Will they embrace the potential of cryptocurrencies, or will they side with those who want to see them banned? The world is watching. The Republican Party has a history of supporting free markets and limited government. This philosophy could make them natural allies of the cryptocurrency industry, which is built on the idea of decentralization and individual empowerment. Some Republicans have already spoken out in favor of Bitcoin, arguing that it could help to reduce inflation and promote economic growth. However, other Republicans are more skeptical of cryptocurrencies. They worry about the potential for fraud and money laundering. They also point out that cryptocurrencies are volatile and risky investments. These concerns could lead the Republicans to adopt a more cautious approach, focusing on regulation rather than outright support. The outcome of this debate will have major implications for the cryptocurrency industry. If the Republicans embrace cryptocurrencies, it could lead to more favorable regulations and increased adoption. On the other hand, if the Republicans decide to crack down on cryptocurrencies, it could stifle innovation and drive investors away. The stakes are high, and the cryptocurrency industry is watching closely to see which way the Republicans will go. The price of Bitcoin has been on a roller coaster ride in recent years. From its humble beginnings as a niche digital currency, Bitcoin has grown into a global phenomenon, capturing the attention of investors, technologists, and even governments. Its journey has been marked by dramatic highs and lows, making it one of the most talked about assets in the financial world. After reaching an all-time high of nearly $69,000 in November 2021, Bitcoin seemed unstoppable. This milestone was a culmination of years of growth, driven by increasing adoption, institutional interest, and a growing belief in its potential as a store of value. However, the euphoria was short-lived. Bitcoin crashed back down to earth, losing over 75% of its value. This dramatic decline served as a stark reminder of the inherent volatility in the cryptocurrency market. Many investors who had bought in at the peak were left nursing significant losses. Despite this setback, Bitcoin has since recovered some of its losses. The resilience of Bitcoin has been a testament to its enduring appeal. Each time it falls, it seems to bounce back, driven by a combination of renewed investor interest, technological advancements, and broader acceptance. Some analysts believe that it could be headed for new highs in the near future. They point to factors such as increasing institutional adoption, the potential for regulatory clarity, and the ongoing development of the Bitcoin ecosystem as reasons for optimism. One of the most bullish Bitcoin analysts is Tim Draper, a billionaire venture capitalist who has been investing in Bitcoin since the early days. Draper's enthusiasm for Bitcoin is well known, and he has been a vocal advocate for its potential to revolutionize the financial system. Draper has repeatedly predicted that Bitcoin will reach $250,000 by 2023. His confidence is based on his belief in Bitcoin's underlying technology and its potential to disrupt traditional financial systems. Draper has even gone so far as to say that Bitcoin could eventually be worth millions of dollars per coin. He envisions a future where Bitcoin becomes a global currency, used by billions of people around the world. While Draper's predictions may seem outlandish to some, they are rooted in his deep understanding of technology and his track record of successful investments. He believes that Bitcoin's scarcity, security, and decentralization make it a unique and valuable asset. Draper is not alone in his belief that Bitcoin has a bright future. Many other prominent investors and analysts share his optimism, pointing to the growing adoption of Bitcoin by both individuals and institutions. Cathie Wood, the CEO of ARK Invest, is another prominent investor who is bullish on Bitcoin. Wood has been a vocal advocate for Bitcoin and other cryptocurrencies, and her firm has made significant investments in the space. Wood has said that she believes Bitcoin could reach $1 million by 2030. Her prediction is based on her analysis of Bitcoin's potential to disrupt traditional financial systems and its growing acceptance as a store of value. Of course, not everyone is convinced that Bitcoin is headed for the moon. There are still many skeptics who believe that Bitcoin is a bubble that is about to burst. They argue that Bitcoin's price is driven purely by speculation and that it lacks intrinsic value. Critics point to the fact that Bitcoin has no intrinsic value and that its price is driven purely by speculation. They warn that the current enthusiasm for Bitcoin could be a sign of a bubble that is about to burst. These skeptics argue that Bitcoin's price is unsustainable and that it is only a matter of time before the market corrects. They caution investors to be wary of the hype and to consider the risks before investing in Bitcoin. Despite the differing opinions, one thing is clear: Bitcoin has captured the imagination of people around the world. Its journey from a niche digital currency to a global phenomenon has been nothing short of remarkable. Only time will tell who is right about Bitcoin. Will it become a global currency, as its proponents believe, or will it fade into obscurity, as its critics predict? The future of Bitcoin remains uncertain, but its impact on the financial world is undeniable. However, one thing is for sure: the cryptocurrency market is volatile and unpredictable. Investors should be prepared for a wild ride, as the market can change rapidly and without warning. As with any investment, it is important to do your own research and to understand the risks involved. The cryptocurrency market is still relatively young, and it is likely to continue evolving in the coming years. Whether you are a believer or a skeptic, there is no denying that Bitcoin has made a significant impact on the world of finance. Section 4. The Policy Tightrope: How Politics Could Make or Break Crypto. The regulatory landscape for cryptocurrencies is constantly evolving. As digital currencies gain more traction, governments and regulatory bodies are increasingly paying attention to how these assets should be governed. Governments around the world are trying to figure out how to balance the potential benefits of cryptocurrencies with the risks they pose. The benefits include financial inclusion, faster transactions, and reduced costs, while the risks involve fraud, money laundering, and market volatility. The United States is no exception. As one of the world's largest economies, the U.S. has a significant role to play in shaping the future of cryptocurrency regulation. The Biden administration has signaled that it is taking a closer look at cryptocurrencies, and it is possible that we could see new regulations in the near future. This could include measures to prevent illicit activities and protect investors. One of the biggest challenges for regulators is that cryptocurrencies do not fit neatly into existing regulatory frameworks. Traditional financial regulations were not designed with digital currencies in mind, making it difficult to apply old rules to new technology. For example, is Bitcoin a security, like a stock or a bond? This classification would subject it to stringent regulations and oversight by financial authorities. Or is it a commodity, like gold or oil? If classified as a commodity, Bitcoin would fall under a different set of regulations, potentially making it easier to trade but harder to regulate for consumer protection. The answer to this question has major implications for how Bitcoin is regulated. The classification will determine the legal and financial responsibilities of those who trade and invest in it. Another challenge is that cryptocurrencies are global in nature. Unlike traditional currencies, which are confined to national borders, cryptocurrencies operate on a global scale. A cryptocurrency transaction can be initiated and completed in seconds, regardless of where the parties involved are located. This speed and borderless nature make it difficult for any one country to regulate cryptocurrencies effectively. International cooperation and coordination are essential for creating a cohesive regulatory framework. The outcome of the regulatory debate will have a major impact on the future of cryptocurrencies. The decisions made by governments and regulatory bodies will shape the landscape of digital finance for years to come. If governments take a heavy-handed approach, it could stifle innovation and drive investors away. Overregulation could lead to a decline in the development of new technologies and applications within the cryptocurrency space. However, if governments are able to create a regulatory framework that is both effective and innovation-friendly, it could pave the way for mainstream adoption of cryptocurrencies. Such a framework would provide clarity and security for investors while allowing for technological advancements. The cryptocurrency industry is watching closely to see how governments around the world will regulate this new and disruptive technology. The stakes are high, and the decisions made today will influence the future of finance and technology. International cooperation will be key in creating a balanced regulatory environment. Countries will need to work together to address the challenges posed by the global nature of cryptocurrencies. As we look to the future, the regulatory landscape for cryptocurrencies will continue to evolve. The actions taken by governments and regulatory bodies will play a crucial role in determining whether cryptocurrencies become a mainstream financial tool or remain on the fringes of the financial system. Striking the right balance between regulation and innovation will be essential. Too much regulation could hinder progress, while too little could lead to chaos and instability in the financial markets. The potential for cryptocurrencies is immense, but realizing that potential will require thoughtful and measured regulatory approaches. The future of digital finance depends on the decisions made today by policymakers and regulators around the world. Section 5. Crypto's future, hanging in the balance. The future of cryptocurrencies is uncertain. Despite the growing interest and adoption, there are numerous factors that could influence their trajectory. The technology is still in its early stages of development, and it faces a number of challenges including regulatory uncertainty, scalability issues, and volatility. These challenges are not trivial and require significant innovation and collaboration to overcome. However, cryptocurrencies also have the potential to revolutionize the financial system and many other industries. They offer a decentralized alternative to traditional banking, which could democratize access to financial services and reduce transaction costs. The decisions that are made in the coming years will determine whether cryptocurrencies live up to their potential or fade away into obscurity. These decisions will be influenced by a variety of stakeholders, including governments, developers, and investors. If governments are able to create a regulatory framework that is both effective and innovation-friendly, it could provide the stability needed for cryptocurrencies to thrive. Such regulations would need to balance the need for security and consumer protection with the desire to foster innovation. If developers are able to solve the scalability issues that plague many cryptocurrencies, it would enable these digital assets to handle a larger volume of transactions, making them more practical for everyday use. This would involve advancements in blockchain technology and possibly the development of new consensus mechanisms. And if investors are willing to weather the volatility, then cryptocurrencies have the potential to change the world. Investor confidence is crucial, as it provides the capital needed for further development and adoption. However, if governments crack down on cryptocurrencies, imposing restrictive regulations or outright bans, it could stifle innovation and limit the growth of the industry. Such actions could be driven by concerns over financial stability, fraud, and the use of cryptocurrencies for illegal activities. If developers are unable to solve the scalability issues, cryptocurrencies may struggle to gain widespread adoption. Scalability is essential for handling the increasing number of transactions as more people and businesses start using cryptocurrencies. Or if investors lose faith, then cryptocurrencies are likely to fail. Investor sentiment can be highly volatile, and negative news or market downturns can lead to significant losses in value. Only time will tell what the future holds for cryptocurrencies. The path forward is uncertain and there are many variables at play. However, one thing is for sure, the cryptocurrency industry is an exciting and rapidly evolving space. New developments and innovations are happening all the time, and the potential for disruption is immense, and it will be fascinating to see what the future holds. Whether cryptocurrencies become a mainstream financial tool or remain a niche market, their impact on the world of finance and beyond is undeniable. The journey of cryptocurrencies is just beginning, and we are all witnesses to this unfolding story.